Good morning. Let's begin with our monthly recommendations. First, we have L&T. It is a multinational conglomerate, a large cap stock. Their core business is in EPC, which is mainly infrastructure related projects, energy. They are also into high-tech manufacturing. Around 50% of their revenue is coming from India itself, and around 40% right now, as per the latest updates, is coming from Middle East. Last year they got a huge order from Saudi, and this is expected to continue over the next few years as well. They also have a lot of listed subsidiaries like L&T Tech, L&T Mindtree, which is their IT service, which is their IT business, and also L&T Finance. So they get regular dividends from them as well, and value appreciation from the listed subsidiaries. Apart from this, speaking about the company, they have an order book of around 6 lakh crores. Their last year revenue was around 2.5 lakh crores. And management has given a guidance of order book increase of around 10% for the entire year. This might increase as well depending upon how the government and private spending is, that trend is going also. So looking, and they gave a very good result. Their Q1 result was very good, but in spite of that, because market was falling continuously past 2 weeks, the stock has not really moved up much. Right now it's around 3,607. So for those who want to accumulate or who wants to average as well, this is a very good opportunity. Next we have Lupin. It is one of the largest pharma companies. Their core operations, around 35-40% of their revenue is coming from US, remaining from India and the rest of the world. So they are mainly a generic company. So generic means, see, once a pharma company introduces a new drug, they will have exclusivity for at least 10 years. So this 10 years they can sell the same drug for a higher price. But Lupin is a generic company, which means once these expiry is over, they will make a duplicate version of it. And if it gets approval, they will be able to sell it. So the margins is less, it is competitive as well, but the company has done really well. The only one risk right now is that the exposure to US is very high. Even they gave a very good Q1 result, but again, because of this tariff situation, the buying is not very strong. But fundamentally, company is in a very strong position. Apart from generics, they are also into API, which is active pharmaceutical ingredients, which are the ingredients required for making drugs. Again, very good quarter, very good cash in hand, but one risk is the US tariff. One more thing we need to know is, see, right now 50% base tariff is for all the products except pharma. Trump has said that he may put a higher tariff on pharma, so that we'll have to see. It is not does not come under the 50% bracket, so that risk is there. Next we have Canara Bank. It's a public sector bank. They also gave very good Q1 results. See, this time all the private banks numbers were not that great, because the NPAs, which are the non-performing assets, which is the percentage of loans which are being defaulted, that have gone up. We are seeing the trend among all private sector banks. Public sector banks comparatively gave better results. So even Canara Bank, their NPAs have been decreasing well. And one more reason for recommendation is it's at a very cheap valuation right now. See, its PE is around 5. Not just that, they have two subsidiaries. One is their life insurance subsidiary, which is a joint venture with HSBC, and also their mutual fund subsidiary, asset management company. They both could get listed anytime soon. So if that happens, some value creation will happen. And next we have Marico. It is a mid-cap FMCG company. Their core business is in oils, mainly hair oil and food oil, edible oil. So speaking of Marico, they gave good results, but one thing we have to be careful of is this year, over the past 1 year, the copra, which is one of the key materials which is required for oil, its price have risen around 100%. So because of this, the company, see, the brand that you would have heard of the Parachute brand. So all the hair oils are all sold under the Parachute brand, and all the edible oils are sold under the Saffola brand. So they have increased the prices of Parachute by around 30% because the price of copra has gone up. And apart from this, rice bran, which is one of the material for edible oil, even that has gone up around 30%. So the company has increased the prices recently. So because of that, they gave decent Q1 numbers, but this is not very sustainable. So we are expecting that over the next second half of the year that the prices of copra will stabilize and company will be able to lower their prices as well. Apart from that, we have this festival season coming up, so we are expecting good uptick in demand from that as well. Last year the company hit around 10,000 crores in revenue. In terms of growth, compared to all the other FMCG companies, they are fine. FMCG last year did not give any good numbers. Even this year numbers are not very great, but slow demand is coming. And finally we have Sri Digvijay Cement. They have a 250 crore capex. So we are expecting capacity to increase to around 3 million metric ton by next year. Apart from that, they are owned by True North, which is a private player. So they might look for an exit next year. We don't know when exactly, it's just only rumor. So if that comes also, we can see some appreciation in value as well. Otherwise, they are a very strong company. Balance sheet with very good cash and very low debt. Looking at last month's review, Nifty gave a negative return of 3.13%. Our recommendations gave a negative return of 2%. See, looking at Bank of Baroda, Nippon and Dalmia, all the three had very good results, but because Nifty was on a downtrend, they really could not move much. Speaking of GNFC, they had a planned shutdown last quarter. So the results, if you look, it will look little negative, but it is only because of the planned shutdown. So we have recently attended their conference call as well. So the management has guaranteed that the plant will soon start operating. So that extra around 280-290 crores of top line revenue and bottom around 110 crores will start coming in from the next quarter. So for those who are interested, you can still average or accumulate GNFC. Precision Wire, no particular reason, only down because market is down. Today is the result, so we are waiting for that as well. Nippon actually gave one of their best quarter results. The stock actually went up to almost 876, and yesterday, as most of you must have noticed, because of the market, it had come down back to 800. Okay, thank you.